Hey guys, I'm Steve and welcome back to the channel where we talk about the joys of stock market investing and long-term dividend gain. If it's your first time stopping by the channel, hit that subscribe button. Trust me, you won't regret it. If you're a returning subscriber, as always, I welcome you back. Guys, listen, I did not know this. I did a video about Meet Kevin and his upcoming ETFs that are coming out. I had no idea that the PP, ticker symbol PP ETF, which is the pricing power, Meet Kevin pricing power ETF, I did not know that was already out on the market, guys. Like, you can go and invest in it right now, and it was sitting. In fact, I'll put it up for you guys. I got my Ameritrade board up here, so I'll put it up. It's presently at $19.66. Now, before you even go and take a look at it, I want you to go take a look at it. Don't take nothing what I say on face value. I want to talk a little bit about the ETF, really get into depth of the ETF, and why I think that Kevin is very smart. And the ETF is reflective of his character, of how he carries himself. Now, granted, I don't know if the way he acts right there is how he acts in real life, which I'm almost basing everything on. I don't think he's in character. I think the way Kevin acts is how he really acts. He's off the wall. He's all over the place. A certain level of arrogance. And, it is what it is. But listen, guys, I'm going to get into this. I looked at the holdings. I just today got a chance to look at the holdings. And, it's different looking at the holdings on, a different website as compared to something that you use as a tool every day. Like, I'm looking at it on my Ameritrade account. So, like, I'm seeing it differently because the way it's presented to me. And a lot of the stocks that he set up and the way he set them up, it left me with reason for pause. And I want to talk about that today. First things first, right? The stock consists of 10 holdings, right? And the 10 holdings are such: Tesla, Apple, US Treasury. I got the card right here, so that's why I'm looking over here. US Treasury note ETF. So we got an ETF in the ETF. Taiwan Semiconductor, Trade Desk Incorporated, Enphase Energy, Nvidia, Invesco DB, US dollar bearish, back in US dollar, and AMD, and then Lululemon at the end, right? To round it all off. Now, first thing about these ETF that I don't like is this, and I'll just jump into it. Number one is too personalized. And when I say personalized, is I think that he did this ETF and he picked these certain stocks, just from speculation of what he thinks, not what anybody else thinks. Like, I've noticed since he's put out this PP advertisement, right? And now he got a new thing called Trade Hack. He pumps his house hack. Now he get this thing called Trade Hack, and it's on his website. I think he came up with this idea and figured out how he can create an ETF and run it, with another firm backing him, run it, but he can have most of the control over what goes in and what goes out, which is not a bad idea. But that shows how smart he is. But also, I think the stocks that he picked on here are just mainly, like I said, on speculation and what he think going to do way, way, way down the line, which is nothing wrong with that. But I think a lot of these companies, the track records of them running for a while is not set up enough. And I think, as a forward-thinking investor, going straight out of it, I think he did this from a trader standpoint, how a trader would think. Because some of these stocks right here, there are way better stocks out there with better value than what he put for his initial pricing power ETF. And that left me for pause because, when you're doing something, and this is something in the financial market where the world will see, and the world can contribute into building, your wealth in addition to their own wealth, and something you giving back to people, because there's a lot of ETFs out there. You want your ETF to stand out as something different, or you want it to stand out as a place where people can come, put their money, and feel safe about it. And I don't think this does that at all. For instance, and you guys probably already heard this, the top two holdings as far as weight, meaning the biggest amount of allocation of that money, right? Because I think it says $1.5 million are allocated so far to the account, meaning as people start, investing in the account and buying shares, that 1.5 will go up. So he said he put $1 million of his money into it already. So I guess somebody else fronted 500,000 or, from trading so far, because I didn't know this thing been out since November 28th. So that's when the inception date started, November 28th. It's been trading since then. Now, it started at $19.98. I think they said it opened on the 28th at $19.98. Today, it sits at $19.66. And that's understandable because, with the market is in a bunch of influx, it's an ETF. So it's not like a regular stock where you'll see big, giant shifts, right? Because it's a basket of stocks. So, one stock weighs the other one down and so on and so forth. But, like I said, it's too personal. Like, I think he just was like, okay, these right here, 5 years from now, I'm betting big on these, and I think he turned this ETF into his own personal portfolio. That's what it looks like, the performance, I think, with the way he set this up is like, it's driven by speculation. Like I just mentioned earlier, I think he's going all the way down the line. And the reason why I say this is this. Look, guys, if you look at the PE ratios on these stocks, right? Now you got a couple of stocks on here that are considered growth stocks. If you look at the whole setup, right? If you look at the PE ratios, some of these stocks I own, and I can justify owning them individually with PE ratios, but they are very, very small, minute parts of my portfolios. And these stocks I'm holding 3, 5 years down the line to watch the performance of them in hopes that the PE ratio does drop. Now watch, the top 2 holdings are such. 23% of the whole portfolio's value is in Tesla. 13% is in Apple. So what is that? 36, almost 37% of the total weight of the ETF itself is in 2 stocks. One of the stocks, right, has a lot of uncertainty in it, Tesla, and that's the top holding. Now, is anything wrong with Tesla as a company? No, I think, in the future, they'll be very innovative, and they'll also be very successful. Now, as far as the stock price, nobody knows that. Now, Meet Kevin has owned Tesla for a long time, like a lot of other YouTubers, and Tesla has made him a crap load of money. So I think he said, okay, look, I'll put Tesla in there because Tesla never failed me. So I'll put Tesla at the top because I know Elon's going to come through and Elon's going to do this. That's speculation. You know what I mean? I believe in Elon as well, but I mean, not enough to put other people's money on that. You see what I'm saying? Then we have Apple. Apple's behemoth. I understand Apple. But I mean, to have 36% of your portfolio in just 2 stocks. I mean, in your ETF in just 2 stocks. I think he could have dispersed it if he could have added more stocks or some blue chip stocks that have a better track record to even out a lot of what he was doing. And I just think he didn't go about this the right way. Another thing is, he has 2 things that I think are hedges against if anything happens with any mistakes in this thing. Like, first one is the Treasury Note ETF, right? 7% is that. That's the 3rd biggest holding, 7.71%, right? I think he's using that as a hedge in case something go on. And I think he's using the Invesco DB US dollar bearish fund at 4.87%. So I think, what we got here? Almost 12% is like how, they say, hey, put a certain amount of money in bonds to hedge inflation and all this other stuff. I think this is his bond call with these 2 stocks. Another thing is, he got 1, 2, 3. Now these out of the 10. 1, 2, 3. Was it 1, 2, 3? Hold up. AMD, Nvidia, Taiwan Semi. 3. You got 3 semiconductor stocks, chip maker stocks. Out of 10 stocks, 3 of them are chip. Now he betting heavy on tech. Because I mean, if you sit over here and you look, he has in the tech sector 54% of the portfolio is in tech. 4% is in energy. 7% is in, almost 8% is in industrials. He has no healthcare. He has consumer cyclicals, which is 33% as well. Now, the way he set this up is the way he set it up. But I just think that going into 2023, this ETF has the same fate, or it could be worse than what Kathy Wood is experiencing. Because if you sit up here and you put up right now where these stocks are in the downturn in the market and everything else, inflation, economy, Tesla's down almost 50%. Apple's down almost 20%. Taiwan Semi down 33%. Nvidia down 45%. AMD down 51%. Now, granted, he can change and move things around because it's an actively managed fund at his leisure. And I think that's one of the things in his defense. If this thing goes awry later on down the line, that's why I say I think he's smart. You know, hey, this is not doing too well. Hey, let's just move this around. Let's move that around. Let's do this. I think that's what the plan is. He has a fail-safe for everything. The things that have dropped, like I said, some of these PE ratios right now are high. Nvidia, 68. Enphase Energy, right? 151 PE. Taiwan Semi, only one seem like it's sane, and Apple as well with a 23 PE, and Taiwan Semi has a 14 PE. AMD has a 42 PE. Lululemon has a 43 PE. And I'm like, you know, there are a lot of other stocks out there that he could have picked. I mean, I know he picking for what he wants to pick for, but I just think, I mean, this thing has danger written all over it. This is a buyer beware situation, you know, because, yeah, granted, it's 10 different stocks, but you got 3 in semiconductors. That sector can bomb. Technology, you got Apple and Tesla. You know what I mean? That can bomb. Now, say technology has a bad year in 2023. This ETF goes to crap. You know, and I just think it's not enough defensive stuff in here. And all of the scenarios weren't thought out when he put this together. He's just looking at the gain it can have. And I don't think he's thinking about the mitigated loss that can occur with this. Like, I compare this thing almost to Carvana a little bit. You know, I think the greed of what he wanted to do is will ultimately be challenging in the end with this. And yeah, you got big names in the beginning to attract and entice investors to come and jump onto your ETF. Like, hey, we got Tesla, we got Apple, we got Taiwan Semiconductor, you know. And they'll say, oh, well, what about that goes bad? Oh, well, we got the U.S. Treasury ETF, Treasury note, 2-year Treasury note ETF. We got Invesco DB US dollar bearish to combine with that. I just think, you know, he's more overtaken of, I wouldn't have to pay taxes on the thing and the fee. Look at the fee. 0.77%. That's an outrageously high expense ratio fee. If you look at ARK has Kathy Wood got what, 0.75%? And then if you look at ARK, their ETF is made up of 12% consumer cyclical, 37% tech, 14% communication services, and you got 33% in healthcare. Now, she got a lot in healthcare too, and they still bombing. You know what I mean? I don't know if it's the time of how the market came up and this and that, but I mean, in a good market, like that last bull run we had, Kevin would look like a genius, and I think he's holding out for that. If he can just make it through, you know, he'll look like a genius. But then again, you know, a broke clock tell time, be on time, correct time twice a day. So, but yeah, I mean, I think he didn't really put a lot into it. Like, another thing is these stocks got high volatility histories. You know, Tesla got a high volatility history. You know, and it's like Jesus Christ, man. I mean, they're all over the place. Like, you know, price range, the simplest thing in the news can send them flying. You know, they don't have that backing of like, okay, this is a bona fide, over the long run, you can rely on this. I mean, there are doubts about NVIDIA. I did videos about, I mean, I own the stock. There's doubts about NVIDIA. Enphase Energy, you know, it's an energy. So, I mean, they're all over the place. And then the thing is with the trade desk, you know, you got trade desk that's what? 1, 2, 3, 4. Your 5th biggest holding. It's not even turning a profit yet. You know, and it's like you have this in the ETF. I just think, man, he's setting this thing up where he can get smoked. Now, I mean, will it ever go to zero? No. But another thing is this. Running something like this and managing something like this, and you like, you know, have majority rule over it, I don't see how you're going to be doing YouTube and all this other stuff and doing that. Because, I mean, there's another thing, like I said, with his character, and I know I keep bringing it up like I hate the guy. I don't hate the guy. I just go by the personality that you know, he presents to me, you, and the rest of the world. Listen, I don't think he is responsible at all. You know, just looking at the whole setup and the whole situation, he could have got way better stocks than this as an intro ETF. Now, he does have 2 other ones, the MKS Select, Meet Kevin Select ETF, and the MKI, which is the moderate ETF, right? Now, I guess on December 9th, which would be this Friday, he's going to ring the bell, and I guess they're going to bring them 2 to the market. Now, I'm dying to see what those ones are. You know, the holdings these ones have. Because this first one right here is, I wouldn't mess with it at all. You know, and I think he put Tesla in the forefront to entice certain people, and Apple right behind it. You know, because a lot of people, especially beginning investors, you'll go look at the ETF and you'll see the biggest holdings. And that's all you'll see. You won't see what else is behind it and what else is under that. And a lot of people get caught up in it. I pray they don't. You know, I would not invest in it. I would wait. I mean, for a while. And then even then, with the way Kevin come off, I would wait again. Because I am not trying to get flim-flammed and jammed up dealing with this. Now, in his defense, I think it's awesome that he created an ETF. I don't think he thought it through. And I don't think that, you know, he sat down with a group of people and was like, okay, what's the success rate? Do you think this is the, what type of suggestions do you think we can make this a better ETF? I don't know. And then, like, you know, in his videos now, ever since he dropped that, and I had dropped off that thought, I apologize. Ever since he dropped that, I got an ETF video, now all of a sudden, and you go back and watch, now all of a sudden, every time, yeah, I'm a financial, I don't mean to laugh. I'm a financial advisor. I mean, you know me, I'm Kevin. I deal with real estate. I'm a financial advisor. I got my own ETF. I mean, come on. Where the fuck is this coming from? That's the part that make me just hate him. Like, you an arrogant dude. It's like you a car salesman that talk about stock. That's how I look at him. You know, you're not responsible. I don't even think you're serious. I think this right here is a money grab for him. I mean, if it goes bad, he can move some things around, I guess, over time. And he can blame it on the economy. Hey, well, look, these stocks with this and that. You know, because another thing is, the way he handled the FTX thing, it took him days to apologize. And it took a lot of heat. Him and a lot of other people. Like, it's just funny that you got hedges where you're betting with the US dollar to save your ETF, but you was pumping crypto before, talking about, oh, it's anti-government, oh, unregulated, this and that, and that. Now in your thing, when it comes down to it, you need the dollar to save you. Anyway, man. But yeah, next year will be crucial. I will definitely be watching this, the MKI and the MKS. I'll be watching them both. But you know what, though? Not to be funny, he might have a banger up there. Now, the expense ratios is high. I don't think I'll mess with it because the expense ratios, I can go get a better ETF. You know, but if you guys watch his channel, he's going to be saying a lot of crazy stuff trying to pump this thing because he can pull money out of it. Not money, like from the fees. He'll make a killing with the fees at 0.77% expense ratio. He will make a killing off of that, and he can pull that money weekly, monthly, or whatever he will get paid off of this. regardless of what he does. I mean, people come into the market every day, and a lot of people are green and not seasoned. People gonna jump into it. They're gonna show Meet Kevin on Friday on TV. He gonna be downtown in New York on Wall Street. He gonna be out there doing his thing. Meet Kevin. A lot of people gonna be starstruck. I'm gonna buy a share. I'm gonna buy 2 shares. You watch on Friday this thing take off. Now we at 1.5 million right now. You watch. I'm telling you, people are fanatic. Listen, guys. All in all, man, be smart out there. You know, I don't hate the man. I mean, I respect this channel. He has his own fan following, like everybody else. But I mean, I just think you cannot be on YouTube and running a thing, a big project like this financially. You can't. You can't. And then the thing is, like, you know, like I said, he said, oh, I'm a financial advisor and all this other stuff. Okay. I don't know what you did to get the criteria for all of that. In 2017, you can go back and look at some of his videos. He walking around talking about, hey, I don't even mess with stock. All I know about is real estate and this and that. Who wants to mess with stock? It's too complicated. It takes too much energy. All of a sudden, you got a ETF and you're a financial advisor. Man, the world is crazy. But anyway, listen, I appreciate you. Leave me a comment, man. Let me know if y'all are investing in this crap. If not, more power to you. But anyway, listen. Appreciate you spending time with me as always. Continue with the comments. Hit that thumbs up. As always, like, comment, share, and subscribe. I'll see you guys in the next video. Be careful out there. Friday will be telling. I will be in here as quick as I can from a couple of projects I got to do. And I want to see him ring that bell. You know what I mean? Hopefully it'll work out. But it makes exciting TV. And 2023 in the investment field is going to be crazy. It's going to be some hilarity. We'll see, though. Take care.